Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. We're continuing our series on doing a book review around Nelson Nash's book, Becoming Your Own Banker. And today, again, Nicole Tate is with us to hear her story and how it's progressed with what's going on with the book, and also to get her insight as she's become an infinite banking practitioner on what her take is on the book and how it's really impacted her lives and how she approaches these discussions around Nelson's book and around this idea of becoming your own banker, or more importantly, taking control of the banking function in your life. Welcome, Nicole. Thank you for being on again.
Thank you. I'm glad we can do this again.
Yeah, exactly. So we'll continue to do it until we can get through the book. We'll see how many podcasts we have that break this thing down. The previous one we talked about just the introduction about what this really is, and then we're going to start getting into the book and really just our take and how we read what Nelson had to say in his book. And again, I think every time I reread it, it's like something new that always hits me. And again, I think that's part of it because my thought process has matured that much more. And you mature in your thought process, and you mature just in the way you look at things after you have certain experiences. That's why I think it's always interesting to do these book reviews, even though maybe I've done them 20 times. I'm coming back and like, I didn't realize that, or I didn't see that from last time. And so that's the exciting part to me, is every time I do it, if we do this again a year from now, hopefully we find a bunch of new stuff because we've had experiences between now and then that's going to impact how we see things. And so just real quick, for those maybe that hadn't heard it last time, your journey down this has been about a 5-year journey, and it's really intensified over the last 2 years. Would you say so?
Yes, that's correct. And it has been just about 2 years now that I first got reintroduced to IBC, and really at that point started digging in to try to figure out what it really was and if it would or wouldn't fit into my life.
From our discussions in the past, it's been about the freedom that this can bring to your life, right? The freedom of relationship, the freedom of not having to be responsible to somebody else. It's not about investment. It's not about anything else. It's more about freedom and control. And that's what you were looking for. And that's what drew you to this whole idea.
Yeah, and I would say, Wade, that I didn't necessarily know that I was looking for freedom and control. That fits very well with me. That's just the way I am. But this book, when I read it, it just really clicked with me. There was just zero question when I read the book that this was something that was made for me.
Yeah, and that's why I think when people read it, there's an old adage is that this stuff is typically caught, it's not taught. Although I was like you, it just clicked with me. Why it clicked with me was the journey I had to go down. Is that I had to understand why this was so important to me, because I wanted to explain to other people. I wanted to teach and mentor other people in this process. And unless you really know why, and that's why these review of the chapters and the review of the book is so important, is because we're trying to understand why it clicked with us. I think, and once you have an understanding of the why, then Nelson always said, if what's going on, you'll know what to do. And so part of my passion is to mentor and teach other agents and other clients on the why and help them understand what's going on, so then they'll know what to do. It's not to be a gatekeeper. It's to help empower people to take control of their lives so they can find that freedom and that control that they're looking for in their lives versus having somebody else run their lives. Well, let's hop into part one of the book on page 11 called Becoming Your Own Banker. And in here, and I know we've referenced this in the past, and we'll probably reference it many times more, Nelson says here right in the opening paragraph, he says, if some authoritative power distributed all the money in the world equally among all the people in the world, within 10 years, 97% of all the money would be under the control of 3% of the people again. I think that's, and then he goes on, he says, I have no real way to prove that. He says that's just his assumption. But I think there would be a truth to that. Wouldn't you agree?
I would 100% agree with that, and I think that just underscores the problem that we have out there that people, and he goes on in the second paragraph to say that the answer lies in the fact that most folks know next to nothing about the process of banking and its importance to their lives and their well-being.
Yeah, and I think that's the real key, is that so many people get caught on a product versus a process. What we're trying to teach people is the process of banking, how we think about money. Because if it was all product driven, all we'd have to do is, buy that magic pill and it would happen. but it's understanding and growing in a process that we have to commit to. We've talked about this in the previous episodes. What are the three things it takes to make this thing happen?
Time, discipline, and money.
Time, discipline, and money. And so if those three things are all a process, right? We have to understand that it's a process of what we go through, and it's anything else. Education is a process, it's not an event. And this is where we have to educate ourselves. We have to get with people that are like-minded, challenge our beliefs, and make sure what we're saying and what we're doing is correct. And I'm always open to that. Challenge me for what I'm doing. And I get people all the time, it's like, hey, this product is better than this product. I said, you're missing the point. It's this process that's the most important thing. So it is the process of banking. And I know there's a lot of people that, well, it's banking, and they think of these big institutions. If it's Wells Fargo or if it's Chase or whoever it is, in their minds, they're thinking that's what they have to do. But it's not. We can take this back to ancient Roman times or even before then in the Bible that talked about this idea of banking, right? The process of banking has been around a lot longer than institutions of banks. That's really what we're talking about, is the process of banking.
Yeah, and I think when you think about the process of banking, and again, I'm just going to refer to the book, he says, whenever a business transaction takes place, money must flow from one party to another party in a relatively short time, or otherwise nothing takes place. And if
Exactly.
you just look at that and think about your life on a daily basis, that is as simple as it gets. Money flows from one place to the other. And the reason that banking became a thing is because money needed to flow from one place to the other. And sometimes somebody had to get in the middle of that because there wasn't money here. They had to create a process where that could happen easily.
Correct. And there's a great book that was written back in, I believe, the 40s called The Richest Man in Babylon. If you haven't read it, it has a real good explanation of that as well. And it's just talking about how the banking process works, right? So it's just exchange. Money's just a medium of exchange. And it's like, how do we make this exchange flow the easiest way possible? And that's all we're talking about. And then once you understand that and you can control it, you don't have to be Wells Fargo. You just have to say, I'm going to take, because the modern banking system is not, there's nothing that resembles a traditional banking system in the modern banking system. There's just, only thing that's similar to those things is just the words. But the process of having access to money and then finding people that need money, that's the process of banking. And then say, okay, here's an exchange. And for the use of my money, I'm going to charge you X. So as long as it's more than what I'm paying for the use of that money, now I have a profitable business. That's all it is. So does it matter, where your money resides? It does in the long run, but still you have to understand the process first, and then we can look at, say, where's the best and most profitable, or best and most efficient way to store our money. And that's really where I think people get lost, is they miss the process of banking. And then Nelson goes into talking about there's just one pool of money, right? Mm-hmm. And this goes back to the analogy of what I've shared in the past in different podcasts too, where I'm having a discussion with my son where, water flowing down a ditch and water being stored in a pool in our backyard. That pool in the backyard, if it doesn't flow, it becomes stagnant and it evaporates, and eventually it's gone. Where the flow of money is where real power comes. Turning a turbine, turning a mill. Back before we had electricity, towns were set up around flowing water because they could put a mill and they could saw wood and they could do a lot of different things with that flowing water. And so the idea of money being this one pool of money is just a big one, is just part of one big pool. Makes a lot of sense. And actually, it took me a long time to really gather that. What was he trying to say? But if you think about it, who holds all the money in this country, right? If you think about it, where's all the money held at? The majority of it. The majority of the money, where's it held at? Who holds or controls the majority of the money?
The banks control the majority of the money. But you have a small segment of the population that really, in this country, that I think controls a chunk of the money.
But yeah, I would agree to that. But it goes back to the 3%, right? The 3% actually control where the money flows, but where is it actually stored? Who actually physically stores the dollars? And I would say banks are a big one, but actually, in all reality, if you look at the whole economy, insurance companies hold the vast majority of dollars.
That's true. They do.
And they control the vast majority of dollars. And so this is why Nelson made the leap. He says, why do I want an intermediary? Why do I need somebody between me and this pool of money? I'm going to buy myself into an insurance company through a mutual insurance company, where I'm actually part of a company that has access to this huge pool of money. Why do I need to have a medium in between there? And that's where he got this idea of, I want direct access to that pool of money, and when I need it, I want to put it to work. I don't want somebody in the middle like a mortgage broker or a loan officer to tell me if I can have some money or if I can have money.
Yeah, so here you go. I just looked at this a different way in this very conversation. Yep.
Yeah, and that's why I appreciate you being on here, because I want your point of view as well, because this isn't me telling you how it works. I was like, what's your point of view? What's my point of view? Because we're at different stages in our lives or in our journey down this pathway with this.
Yeah, and I think that's part of the discovery process. There are things sometimes that I come to you and say, I just thought about this over the weekend or last night, and I never thought about this before. And you're like, yeah, we all have to take that journey and internalize what's in this process, what's in this book, what's in this lesson, and make it fit our own lives so that we understand for our own selves what it means.
Exactly, and how it fits where we're at in our journey right now. And then hopefully by working with you or me or somebody that understands this, we can grow that, we can make that thing blossom. So it's not like this, it's a stagnant journey. So it's just not, you're not on your own, you're on a path with people that understand it, have gone down the same path as you were going down. And we can grow this thing exponentially. Instead of saying, oh yeah, I got this, now what do I do? I'm left out on an island. And I'm gonna say, you're not left on an island. If you have the desire to read this book, to understand what's going on here, you're so much further than the other 97% of the population. Yeah. You're much closer to being that 3% of the population that controls the money that's in this world. Because now you're going to understand how money flows and how money works. And then it's up to you if you want to take control of it or not. It's empowering, it's not controlling.
Yeah, I was thinking about your comment that money has to flow. And a lot of times I hear people compare this process. Why would I put money into a whole life insurance policy as opposed to putting it in the market or putting in my 401k or whatever that looks like? And just thinking about that process and the fact that it has to flow, we expect money to flow always. So even if we put money in our 401k, we expect growth out of that 401k. We expect things to be happening inside of that 401k. The difference is we have zero control over that.
We have zero certainty. Going back to, again, the process of banking and then where we store our money. Those are two different conversations. And now we're going, where are we going to store our money? And it does come down to, in Nelson's point, he makes to what he was referring to. If you think about truly what a mutual insurance company does for us, working with a mutual insurance company, is that they're ran for the benefit of its policyholders. That's us. That's you and me. That's everybody that has a policy. And we're buying a company, a partnership into a company. If you think about it, that's all mutual insurance, life insurance policy is a partnership in this mutual insurance company where we're purchasing a policy with a predetermined valuation that you know what it's going to be at the end, if you either die or it matures. We have a guarantee. I can tell you today what the very least, I can say, here's what 20 years from now, this is the very least all you're going to have 20 years from now. You might have more, but you're never going to have less. And when you have that certainty, now you can start the banking process because you're not worried about where your dollars are going to be at. So some people might say, well, I'm going to put my money in a 401k. I'm like, hey, that's great. But does that give you predetermined certainty so you can take control of the banking function? Am I against 401ks? No, if it works for somebody, fine, let them do it. Because we're not talking about investments. We're talking about the process of banking and the banking function.
Yeah, because the 401k has nothing at all to do with the banking function.
It's like, I had a guy tell me this one time, and I love this analogy. He says, you're going to a dishwasher, you're going to go buy a dishwasher at a bike store. It has nothing to do, one has nothing to do with the other. I think that's where there's a lot of confusion in here as well, because this is all about taking control of the banking function. So,
yeah, and he talks in here later. I'm going to skip to the end because I have this highlighted as well. He asks in here, it's all a matter of how much of the banking function do you control as it relates to your needs. And when you start to think about that and you think about the control over the banking function that I have given away in my life, it's really shocking. It really is shocking. And it's just, that's what most people don't learn anything else. And so we just go through and do the same things that we've seen everybody else do.
I had a guy in real estate one time I asked him, I said, if real estate's so great, why isn't everybody willing to do it? Why doesn't everybody do it? And his point was, they're not willing to do it. They don't want to take the time to educate themselves. They don't want to take the process. He says, buying real estate could be great for everyone. But not everyone's going to want to buy real estate because they want to take the time or the commitment. It goes back to the three things we talked about, right? Time, money, and discipline. They don't want to apply those things to their lives, and so they're willing to go along and just do what they've been conditioned to believe to do, and they're going to get the same results everybody else gets. And for some people, that's going to be perfectly fine. But for those that want something different, this is what Nelson really what he was challenging us to do is that we have to set up a separate business in our minds. It doesn't have to be anything formal. It could just be just in our minds. We have to set up a separate business to take control of that banking function. And it goes back to that exact same statement. How much of that banking function do you want to control as it relates to your needs? How much? Do you want to do 50? Do you want to do some? Can it all be done right away? No. Nelson talks about many times about not being in control of that banking, or it's going to take some time to take control of that banking function. So it might take 5, 8, 10, 12 years before you can completely get rid of what he called the snakes and the dragons, which was the banks in his life, because the banks in his life made his life so miserable, he calls them the snakes and the dragons. But even as much as he disliked it, he couldn't get rid of them immediately. It took him 13 years to completely divorce himself from the traditional banking system. So is it going to happen immediately? Absolutely not.
It makes me laugh because I think about when I was a kid and we would go to the bank, and I'm not sure that my parents actually had close relationships with any of the banking people, but way back in the day, banks would know, in small communities, they would know their customers and they could make decisions based on what they knew about their customers. But they were still a business, and they were in the business of banking, so they could make decisions, but they were also very accurate and very banking. Money didn't leak out everywhere. They knew where it was going. There were very accurate records of what money came in and what money went out and who held what money in what account.
Yeah, they ran a very tight banking ship, right?
Yeah.
And then so why don't we want to emulate that? Why is it so foreign to people to say that's a business that seems to make money? When I was growing up, I looked at all the farm ground where we grew up, right? So the farm ground in the area that I grew up, or the areas that I visited a lot. Why is this name that was on all the different property was the family name of the banker. And what I found when I started asking questions was during the 30s and 40s, the banking family who had access to money, applied the banking function, during the Depression would buy these farms for 20 and 30 cents on the dollar. And then when things came back around, now he owned townships. He owned all the land, not all the land, but a lot of land in that area. It's because they were applying the banking function. They ran their money as a business versus what we've been conditioned to think is to run our money as a consumer. And that's all we were talking about.
Yeah, and so that brings up too the idea that you have cash available when there's chaos. The chaos creates opportunities. I'm not sure exactly how you say that, but
right.
When the chaos happens, there's opportunities, and if you have some cash that you can access immediately and without having to explain or ask permission, you can take advantage of those opportunities, and some of those can be very lucrative.
Very much. And once you've done it once or twice, that word gets out that you have access to cash, then you won't find great opportunities. They're actually going to come and find you. And it took me a while to really understand that. And what I've found now is, because I've been in this realm of infinite banking, and when we've let it out there, like, hey, if you got opportunities, if there's opportunities, we're willing to lend money to make that happen. Also now, great opportunities are coming knocking on our door. We don't have to go find those opportunities. But it doesn't happen overnight. It's not, I have a client and a friend of mine, he always says that everybody wants a lifetime plan that they can do over a weekend. But this doesn't work. You have to have a lifetime plan that you implement and that you live really for the rest of your life. It comes back to the time, money, and discipline conversation. It takes the discipline to apply those same principles on now and 20 years from now.
Yeah, and so now you have cash that people know that you have and you're willing to loan it out. That's part of this banking function. So that's part of the business. You wouldn't just loan the money out to anybody with no expectation that there's going to be a repayment and that there's going to be a repayment with interest. That becomes a business transaction as well.
So you have to, that's exactly right. Part of that is that you have to you still have to be an honest banker, if there is such a thing, right? You have to be that honest banker. with yourself and with your customers. If I'm a hard money lender, I'm gonna lend somebody some money to go flip a house. Is my expectation they're gonna pay me back principal and interest? Yeah, that's the expectation. That's the reason why I'm doing it. So I can put my money to work versus me, again, going back to the introduction, it's either money at work or people at work that generate income.
Yeah.
So if I put my money to work, do I want that asset, which is a very valuable asset, to have the best rate of return that it can possibly get?
Of course.
So why wouldn't I charge principal and interest to all my customers, even ourselves?
Yeah.
Because we are a
we
customer
are
of all
customers.
banks. Right. Successful banks have very few non-performing loans by their board of directors. Banks that have tremendous amount of non-performing loans by their board of directors.
Yeah, and that goes to another section that we haven't gotten to in the book, but it is really important to understand that and to internalize it, that we are a customer, because we have been molded to believe that cash is king, and if you just pay cash for everything, you're good. But understanding that there's a cost to that cash.
Yep.
There is a cost to that cash. You're borrowing it from somewhere. If you're using it for this today, you're borrowing it from something else that you could have used it for tomorrow. And so you
Yeah.
have to be willing to accept that and to pay for that cash.
Yeah. It's exactly right. That is the key to understanding this, is that it is the most valuable asset any business can have, and that's cash on hand. And when we put it to work, we better sure and heck get a good rate of return, because it is a valuable asset. And it's the same thing, right? It's like any other business. If I have a valuable employee and I said, hey, Nicole, I got some capacity with an employee, why don't you go ahead and use them for your business, but I pay the bill and I never charge you, or I don't at least charge you more than what he cost me, then I'm going to be out of business pretty quick, right?
Yeah.
And this is why 3% of the population is going to own or have all that money back in their hands again after 10 years, because they understand this. The people that say, hey, I'm going to pay cash for this and never account for that cash are going to be part of the 97%. Again, the lottery ruined my life. People don't understand that part of it. They think money is the solution. I'm saying money is part of the solution, but understanding how money works is the ultimate solution. And when you put it to work, charge your principal and interest no matter who your customer is. If you're the customer, you should even pay more, because you understand that. And if it's somebody flipping a house, they should pay principal and interest more than what I had to pay for. And that's the real key to what Nelson's talking about in this chapter. All right. So any last comments on that quick chapter?
No, I think it's a short little chapter, but there's a lot of golden nuggets inside of that. And it really
Powerful.
just is the premise for what this even is.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.